Wednesday, August 5th, 2020, Monaco 64, home of alternative economics and contrarian views. For all my longtime viewers, you're probably thinking, oh, Mario's really happy. Gold is above 2,000. Yes, I'm happier for being right than actually what this signifies. Of course, it's nice. It means that our savings will be protected versus the coming onslaught of inflation. Yes, there is a lot of controversy over what inflation is, but in my view, this is not a good sign. One thing I'd like to stress, this is not the time to trade gold or silver. And that's for those of you who have been accumulating or stacking gold and silver. For the traders, it's a different story. But even for the traders, I think they would do well to buy 1 or 2 ounces of gold or a few hundred ounces of silver, real physical silver, and put it aside as well. It will act as insurance versus what's going on. I even tweeted yesterday that the dollar had dropped to a new low, right? Because I don't even think it's gold or silver going up. It's the fiat currencies going down. And as you can see by the charts here of all the major currencies, that gold is making new highs versus all of them. This is not just a dollar phenomenon. The other thing I wanted to point out is the case of Venezuela. And I have to thank Bell and GP for this idea. He made a video about this a few years ago. And I have to give him some credit. He looked into this, and I looked into this yesterday. So what I'm trying to say here is that yes, gold is doing really well. You're going to hear a lot of people in the mainstream. I read some articles yesterday in the FT, in the Telegraph about gold, and I read the comment section. There's still many people out there who think nothing of gold, who say, wow, you would have done better to be in stocks. Someone was mocking the comment in the article saying that it is a protection versus inflation, as if there was no inflation, right? I'm not saying here, and I'm going to go over what happened in Venezuela, that this is what's going to happen with the major currencies, but it's a possibility, I think. So Venezuelan bolivars per troy ounce of gold. So I've taken a couple of charts. The first chart on the left is gold from around the beginning of 2013 to the beginning of 2018. So a 5-year period there. You can see that with one bolivar fuerte, they call it a bolivar fuerte, which means a strong bolivar. That's really ironic. So you see that gold dropped from 10,000 down to around 7,000 bolivars by January 2016. So those people holding gold in Venezuela, let's say they bought at 10,000 and now it's dropped to 7,000. They probably would have thought of getting out, and then it started going up, went up to almost 13,000 there, as you can see, in July of 2016. And then it dropped again in January 2017. And then it started going up, and it matched the high from 2016, around 13,000. It kept going up. Let's say someone who bought at 7,000 doubled his or hers bolivars, got out at 14,000. Wow, that was a great trade, right? But then you go to the chart on the right, which is a chart from 2013 till now. Look what happened after 2018. Even that period from 2013 to 2018, it's a flat line now. You can't see anything really because it was so, the move has been so huge. You can see that a year later in 2019, if you had sold at 13,000, it was at 300 million. And now the the bolivar fuerte, the strong bolivar, is well, gold is at almost 501 million bolivar fuertes. So that means that back in 2016, one bolivar bought 1/7,000th of an ounce, and now it buys 1/500 millionth of an ounce. Am I saying we're going to 500 million in US dollars? No, I'm just trying to show you how trading gold, when currencies are unraveling like they are right now, is a very dangerous thing to do. I think it's best to hold on to it. Yes, of course, you might need to spend it in the real world for an emergency, but if you're earning in fiat and you're still able to cover your costs to live comfortably, keep the gold and silver safely stacked, I would say. And yeah, that's the point I wanted to make this morning about the Venezuelan bolivar, how the price of gold is done with the bolivar or bolivar, and how someone would be really kicking him or herself if they'd sold it, bought it at 7,000, sold at 14,000. Wow, great trade, double the money. They'd be kicking themselves a year later, seeing it would be at 300 million. I think we are in unprecedented times. What would give me confidence to get out of precious metals and go back into the national currency? Well, it would be the unwinding of everything central bankers and politicians are doing right now. So central bankers, they'd have to unwind their balance sheets, sell off a lot of their assets, and go back to levels prior to 2008 that they had in their balance sheets. Federal Reserve was at around 800 billion. Then they'd have to start raising interest rates. Governments would have to start taxing more, which I don't like, but they have to do it. They have to start spending less, cutting the size of government, really shrinking things. So do you think they're going to do that? I don't think there's a chance in hell that they will do that. So that's why I'm going to hold on to my precious metals. What kind of price do I forecast for gold? Frankly, I don't know. It could be anywhere. It just depends on how much more the central bankers and politicians inflate the monetary system out of thin air, of course. I was speaking to my wife yesterday about Venezuela and the hyperinflation there, and she said, that's true, they've done really badly, but the US has put a lot of sanctions on them. That hasn't helped. And she's right. But then I thought to myself, what are the lockdowns and all the shutdowns of the economy? They're not called sanctions, right? But de facto they are sanctions. So I'm concerned that that's what we're getting. Really, that's what lockdowns are. So, and the disruption of the supply chain, that's what happened in Venezuela. And so what did the Venezuelan government and central bank do to fight the sanctions? Well, they printed. What are we doing to fight the lockdowns? Well, we're printing. So I just wanted to put that out there. And I just wanted to show you a book I've had for quite a few years. It was written in the mid to late 80s, maybe early 90s. I'm not too sure. The Triumph of Gold. Yes, it's taken a long time, but Dr. Franz Pick, he has been right about it. Just because something takes a long time to evolve doesn't mean to say it's not right. So here you go. That's an interesting book. If you can find that online, I recommend it. It's not a very long book. Dr. Franz Pick, he actually used to publish a yearly book on exchange rates. That was during the 50s and 60s, during the Bretton Woods period. And central bankers used to buy his reviews of fiat currencies or the currencies. So it's an interesting book. Yeah, I think the death of the dollar and all the other fiat currencies is just around the corner. Dr. Franz Pick, I think, died in the late 80s, and he even fought during World War One in the Austro-Hungarian army. He moved to the U.S. after World War II, I think. But does that mean we're not going to be using dollars or pounds or euros in a few years? They're going to disappear? No. What I mean by the collapse of the dollar and the other fiat currencies is their purchasing power. Maybe they will have to bring in another name. Who knows? But it's not looking good. Yes, it's a little bit like Bitcoin, I would say. Back years ago, if you bought it at under $100 and you kept trading and you sold it at 200 and you got out and you wished you'd kept it because it went to 20,000, I think it's the same thing gold could do. But this time, the repercussions for the larger economy, for the monetary financial system is much bigger because gold is a very important part of the system. Bitcoin, of course, still isn't a big part of the system. And I expect the cryptocurrencies to keep doing well. Would I also get into cryptocurrencies? Yeah, I think cryptocurrencies will do well. You need to really do your homework. You really need to keep on top of all the new wallets, how to deal with exchanges. While with gold, it's very easy. You just go to your dealer, you buy a coin, gold or silver or a bar, and you put it away. You don't have to update your wallet or keep your private key. Make sure you don't forget it. For some people, that's very complicated. For those who are tech savvy, yeah, cryptocurrencies are going to do well as well. There's a limited supply of Bitcoin. Other cryptocurrencies, that's a different story, the alt currencies. When I started this channel out, I wasn't out here to sell anything, and I'm still not. But I've had a lot of people in the past ask me, where can I get some precious metals? And I've told them many times, do your homework, Google, look for the best deal from all the dealers that you can find that are reputable. And at the same time, though, I gave them a promo code for a dealer that I've been dealing for almost, well, about 18 years, goldinvestments.co.uk. They're arguably one of the oldest family-run bullion dealers in the city of London. If you're looking to get involved, use my promo code Monaco64. They'll give you a slight discount on the price. And there's also Glint. Glint, they keep your gold stashed away in a private vault in Switzerland. And at the same time, they give you a MasterCard where you can lock your card to your local currency, pounds, euros, or dollars, or to gold, and even spend some of your gold. So there's that as well. There I have a referral code. It's Mario Glint 79. So, and as I said, you need to do your homework. You need to get the best deal if you're going to buy physical precious metals. But I think Oliver and Simon Temple at Gold Investments, you can even talk to them. And I vouch for them, and they'll give you a good deal. But if you get a better deal anywhere else, get the better deal. But make sure they're reputable dealers as well. So there you go. Let's look at the markets now, see where they are this morning. It's 7:48 a.m. London. So we've got spot gold at 2,029.80. So that's up another $10. So yeah, this is the first time, well, yesterday afternoon, London was the first time spot gold got above 2,000. The December future has been trading above 2,000, but I look at the spot price. The low has been 2009 and the high 2031.76. So we're right near the highs. Silver is at 26.35. That's up 1.4%. So gold is up 0.5%. I've noticed the gold silver ratio has dropped below 80. That's a good sign for the overall gold and silver markets. Silver usually outperforms gold in a precious metals bull market, and it's doing so right now. The Dow futures up 94 or 1/3%. I've noticed that we are at a key juncture in the Dow gold ratio. We're around 13. I think if we break 13, it means gold could continue to outperform the stock market. Stock market up though this morning, up 1/3%. S&P up 10 points. NASDAQ 100 is up 1/3% at 11,100. The fiat currencies are actually pretty steady. They're a little firmer, but it seems like the dollar is kind of stabilized a bit, even though gold has kept going up. We got cable at 130.82. That's up 0.1%. The euro is at 118.18, up 0.15. The dollar is down 0.1 versus the yen at 105.60. And the dollar is down 1/3 versus the yuan at 6.95. The oil price, WTI is approaching 42. So a few days ago, we were around 40. So oil is also picking up, not just gold and silver. I would expect the commodities now to start, the general commodities to start doing a little better. So we're at 41.88, up 1/4%. To finish off, the bond market, the 10-year yield is at 0.52. So it's actually dropped from yesterday. We were at 0.54. So that's another thing that's driving precious metals. The fact that you're getting almost, or you're getting no return, no real return on your money in the treasury market. 30-year yield is still at 1.2. So that's going to be interesting as well to see if that eventually drops below 1. 2-year note yield is at 0.109. So that's continued to creep lower. That 0.10 or 0.10% is going to be important because that's where the target for the Fed funds is 0.1. So usually the 2-year stays above the Fed funds target. If it goes below, it could mean that the market is telling the Fed that they need to cut rates. So there you go. Trade if you want, but hold on. That's the old adage, a bull market, you need to hold on to the bull. In this case, I actually see it also as a bear market, kind of like the big short, the next big short. We'll have to see. Fiat currencies, I think they are the next big short. So that will mean everything going up against fiat currencies, but especially the monetary metals. So if you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to the channel if you haven't yet. And you can also follow me on Twitter, Facebook, and all these other platforms below here. I wish you all a great day. Take care. Bye.